You ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them out.
Happy Monday, everyone, and good morning, afternoon, and evening, depending on where you're watching in the world. I hope everyone had a nice weekend too. And if you did trade on Friday around the NFP, I hope that did go well. We were just discussing before the call started, Gim and myself, that was a little mixed and challenging, and we will be providing a summary as well very soon with Gim Hong, just going through what really did go down with NFP as well. But just before we get started, a big welcome to everyone from the LCMS Traders Club that is watching this now, and to anyone watching this later on the YouTube channel, make sure you visit the Jindal Thai website and get into the LCMS Traders Club as well. And a big welcome to anyone new watching this, and a quick introduction. This is the Currency Call presented by Forex Trading Asia, and we look at the currencies every Monday to Friday at 11 a.m. GMT +8. The currencies we look at are as follows. So Monday, we've got the Aussie and Kiwi. Tuesday, we've got the Euro. Wednesday, the pound. Thursday, yen and gold. And then on Friday, we've got CAD, and we've also got oil and cryptocurrency too. And we endeavor to make these calls beneficial to both long-term and the short-term traders too. We'll be discussing breaking news analysis. We'll be going through trade ideas and how to structure those trade ideas as well. The detailed trade ideas are only posted in the LCMS Traders Club as well. So that's where they do go if you're looking for a bit more detail. So that's why I encourage you to visit Jindal Thai website and to check it out in more detail. Just finally as well, before we do get into everything, I just want to share a quick disclaimer that's quite important. So any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. So just to get things kicked off, we did have NFP out on Friday night, and Gim Hong here, currency strategist with LCMS Traders, will just be going through a summary of what happened. So over to you now, Gimmy.
All right, thanks, Scotty. Happy Monday, everyone. I seriously hope nobody traded the NFP, because like what Scotty has mentioned, it was a little bit mixed. Okay, how mixed is mixed? Let's take a look. Okay, first impression, this NFP report is pretty bad, in the sense that, you know, only 199,000 jobs will be created in December. Okay, well, during the, like what I mentioned during the prep, okay, it's a bit hard to actually speculate, project, forecast the figure this time around. Could it be better? Could it be worse? You know, kind of thing. Could it be better because, you know, it's festive season, you know, there's more demand for workers because people are just going shopping, right? So you probably need more workers to do all the stuff and things like that. Could it be worse because of the Omicron variant, right? So the forecast was 426,000, and the release figure fall short by probably close to 3 times of the expectation. Okay, 199,000 jobs. All right, and it's even lower than the previous, the November's figure of 249,000. Okay, so first impression, this report is bad because of the employment change falling way below expectation. Okay, now that's not the end of the story. Okay, because if you were to look at the actual report, now this is the, what you're looking at right now is the report released. It's a super lengthy report that I personally don't suggest you guys to go into it, because I'll be going to it and breaking it down for you guys. All right. Now, this line over here is what we might want to pay attention to. All right. The change in total non-farm payroll employment for October was revised upwards by 102,000. Okay, from 546K to 648K. And the change for November was also revised up by 39,000 from 210K to 249K. Okay, so I think you guys have been hearing from me, you know, on a monthly basis, every Friday, every Monday, okay, after the net non-farm payroll, that prior 2 months data were actually being revised upwards again and again and again and again. All right. So this has kind of like been a trend for, I don't know, for the past at least 6 months at least. All right. So despite, okay, the poor December figure of 199K, we are now seeing a total of 141K of upwards revision from the previous 2 months. Okay, so it's kind of like, it's bad, but it's not that bad because we have this consolation coming out from the revision. Okay, and then if we were to look back at the other two figures, okay, unemployment rate continues to decline. Okay, and there's something about the unemployment rate that you guys should be paying attention to, and that is, okay, December's 3.9% is actually the new low for the pandemic. All right, and let's look at where the pre-pandemic level for unemployment rate was. It was around 3.6%. Okay, what does this mean? This means we are very, very close to the pre-pandemic unemployment rate level. Okay, which is again a good thing. Okay, now adding on to the good stuff, I would say average hourly earnings continue to rise. Okay, it was forecasted to rise by 0.4%. We are getting a rise of 0.6%. All right, wage inflation is going up. Okay, and when it comes to inflation, right, remember that the Federal Reserve is already, they're already done with the whole inflation being transitory. Right now, inflation is a pain. Okay, they are feeling the pain. The US is feeling the pain, which is why they are doubling up the whole pace of QE tapering. Okay, which is why once QE ends in March, okay, they may actually be hiking interest rate as soon as March or even April. All right, and many of the members are actually expecting 3 rate hikes in 2022, as compared to early on last year, whereby the rate statement was actually indicating something like, oh, interest rate hike is unlikely going to take place, at least until 2023 and things like that. But right now, 2022, we can actually expect 3 rate hikes. Okay, very, very hawkish tone coming from the FOMC. Okay, so overall, very, very, very mixed report, I would say. And one more piece of data that I would like to show you guys is the participation rate. The labor force participation rate was unchanged at 61.9% in December. Okay, so no change, meaning there's no more people coming into the returning back into the labor force. There's no more people, okay, leaving the labor force. My take is this, okay, because the Omicron variant actually hit the US in late November, okay, and throughout the whole of December, we've been hearing very mixed opinions coming from medical experts, from CEOs of pharmaceutical companies, okay, saying that, oh, 3 jabs from our company may get you a good resistance towards Omicron. Oh, Omicron may be more contagious than Delta and things like that. Oh, Omicron may not be as deadly as Delta and things like that. So, the whole, I would say, situation with Omicron was basically unclear, was basically mixed throughout the whole of December. Okay, it's just like recently that they start saying things like, oh, it may not be that bad and things like that. Okay, it may not be as deadly as the previous variants and things like that, right? So because of that, all right, it may be the case that the citizens, the people in United States, okay, they just decide to, we'll just leave life as it is first. All right, let's not do all the whole, quitting jobs and things like that. Basically no change in, their daily lives. Okay, we still go back to work as normal. We still go back to school as normal and things like that until we receive more advice from the medical experts. All right. So because of that, my take is that, that may basically be the main reason why participation rate remain unchanged. Okay. So overall, a pretty mixed report. All right. And for what it's worth, the main driver for the 199,000 jobs being created was the leisure and hospitality, which actually contributed to 53,000 jobs. All right. So I guess right now, without the whole, with no new restrictions or tightening of restrictions coming in from the United States, okay, we can still expect, jobs to increase, but probably at a lower pace, okay. And one more thing to share, okay, one more thing to share with you guys. Let me pull it up quick. Is my personal tabulation of the jobs figure in the United States. Where is it? Okay, so what you're looking at right now is the tabulation of the figures, all right? So, ever since March 2020, pandemic hits, there was a negative 1.4 million loss in jobs. The following month in April, there's a 20.8 million loss in jobs. And then ever since then, there's pretty much been recovery, except for December 2020. There's a negative 306,000 loss in jobs, okay? And then I've already updated the October and November's figure, okay, with the newly revised figure. And at the moment, okay, good news. The US is probably about, it's around around 3.7 million jobs away from pre-pandemic level, okay? Looking at the illustrated graph over here, okay, the blue line, I would say it's stagnating, okay? It's getting slower and slower, like some of you might call it a logarithmic increase of the, jobs gain and things like that. Yeah, it's getting slower and slower, but we are getting closer and closer to the zero mark, okay, which is the neutral level. Anything above the zero mark would be pre-pandemic, okay? So jobs gains, is actually starting to slow down, okay? But nonetheless, we are still seeing revision from the previous months, okay? So you guys may be wondering, okay, being one of the dual mandates of the Federal Reserve, okay, will this whole slowing down of jobs creation in the United States actually hold back the Fed in their more aggressive tapering and their more aggressive call for the number of rate hikes in 2022? Okay, my view for now is no, okay, because inflation is the main issue right now, okay, in the United States. So with that, the Fed is pretty much all in to curb inflation, all right? And because of that, the inflation report for this month, for the next few months as well, okay, I would say, will be the key, okay, will be the most important key to whether there'll be any change in the Fed's monetary policy plans ahead moving forward, all right? So right now, I would say, the job side of things is pretty okay, pretty calm and things like that. It's just that, with all these mixed figures coming in, it may pose a bit of a challenge for us to trade, all right? Because last Friday, during the club, if you guys are not in the club, do join us, because we do have a lot of conversations over there taking place during high impact events, economic data releases like the NFP, okay? And like last week, like I've mentioned in the club, we are better off trading the cross pairs, okay, non-USD pairs or non-Japanese yen pairs during the non-farm payroll data release, okay, because like I was talking to Scott earlier on today, prices just move up, next moment it just retraces like that, because if you guys were to caught the move at the highest point of, I don't know, euro dollar, pound dollar, or Aussie dollar, Kiwi dollar, next moment, it may just be coming back down to hit our stop loss and things like that. Whereas for the cross pairs, I realized that many of the pound pairs specifically, okay, the movements have been more consistent, have been more, I would say, sustainable. Okay, at least for the first half an hour, we see like a strengthening of pound against Aussie, against Kiwi. Why is that the case? I have no idea. Seriously, it was the release of non-farm payroll, okay, but US non-farm payroll, US employment figures, but the pound just strengthened against the other currencies, like the commodities currencies like CAD, Aussie, and Kiwi, okay? Probably because of, changing positions of trading positions and things like that. But, sometimes it's just good to just look at all 28 pairs, okay? So that is my sharing for the US non-farm payroll. Let's see if there's any questions from our audience. What about the number leaving the workforce and new ones added? Oh, as in like, I believe you are referring to the participation rate, right? So there's actually no change in the participation rate. Personally, I believe there's some change. Okay, it's just that, you know, after some doing some rounding off and things like that, from the macro perspective of things, okay, from the overall perspective, there happens to be no change. Okay, so yep, no change in, you know, number of people leaving or entering the workforce. Okay, any other questions from our audience? If you guys can't think of any questions, or if you guys can think of any questions later on, you know, just put it in the chat, Ecofin chat and things like that. All right. So with that, I will hand it over to Scott for the DXY. Let's see what he has to share with that. Okay, back to you, Scott.
All right, thanks for that, Gimme. And just before I get into the DXY, I just want to share a handy resource. So this is shared every Monday morning, and it goes on the Forex Trading Asia website here. And it's just a nice recap of the events, the main market economic events that did take place last week, and it's a nice little summary. So a nice way to get positioned for the week ahead as well before you start thinking about specific trade ideas as well. So just wanted to share that as well. That goes in the Forex Trading Asia website every Monday morning at around 7:30 GMT plus 8. But to get now into the US dollar index. So what I've got up here is just the daily time frame, and just a little bit of analysis to share. So we've seen this range continue. Now, like we discussed in the chat on Friday night, if anyone is in the LCMS Traders Club, you know, there was quite a lot of good activity in regards to just observations of what really happened. Was that we saw the US dollar, it reacted favorably at the start, and then as the market absorbed the news, it did really fake out, and then we saw some reversing take place in the risk currency. So we did see the US dollar move a little bit lower, and it was obviously a little bit challenging if you were trading the traditional pairs, but we're currently at 95.90. We've seen a range of around 1.43%, the high nearly to 97, the low of around 95.50 or so, and that's, you know, 56 days we've maintained this range without breaking, you know, to the downside or breaking to the upside. And going to be interesting to watch just if we do start pulling back again, if we do get a test of the lows and if buying takes place. I'm a little bit cautious to say, you know, buying right now. I just want to see how things settle. So if we go to the 1 hour time frame, we can see we are getting a little bit of a lift this morning in the Asian session, but again, it's been quite temperamental. We've got the, you know, the recent highs of, you know, 96.50, we're below 96. So I want to see if we do get through 96, and then we've got a little bit to deal with at 96.30. And just to go into the news now as well. So not a lot for today, but just to scan, we do have a little bit going on tomorrow just to pay attention to. We've got Jerome Powell, the Fed chair, is testifying at 11 o'clock in the evening. That's GMT plus 8. So if you are hanging around in the chat, we will be around just to point out if anything is happening. Normally, it does take a little bit of time once the speech has been processed by the markets a little bit. So again, be a little cautious with jumping in straight away, unless you are a little bit more experienced with taking shorter term moves. So just depending on what is mentioned here, that could offer a bit of a catalyst to the US dollar. And we do have a little bit of equity discussion tonight as well on the Monday call, so make sure you check that out, as well as the economic calendar for this week is going to be summarized also. So definitely worth checking that out tonight, 8 o'clock GMT +8. But in conclusion, US dollar, really it potentially has a little more downside if we don't see 96 broken. So be cautious with that. Going to have to wait to see some price action, confirm some direction, but it's just a little bit range bound still. So definitely I'm not too keen on either way quite yet. But those are my thoughts there on the US dollar. Now we do have the Aussie and Kiwi as well today with Gim. So I'll pass it back to you now, Gimme.
All right, back to me again. Now let's start with Aussie dollar. Okay, so what's this candle over here? Yep. Okay, so last Friday, okay, apparently the market sentiment for the US non-farm report was pretty weak for the US dollar, okay? And hence we see that Aussie dollar actually tested this support over here of 0.716 and then bounced off, all right? So at the moment, okay, it looks like a good buy, all right? But personally, okay, if you were to look at this level over here, 0.72, okay, indicated by this horizontal blue line, you will see that this is actually a key level, okay, a round level. And my take is this, all right, at the moment, Aussie dollar is actually reacting off the level. Looking at this, slightly long upper shadow over here, okay, and then right now it's actually moving back downwards. My take is the Aussie dollar is not ready for a continuation of its recent small upwards movement. Okay, it's not ready to trade above the 0.72. Okay, so does that mean that there's no buying opportunities for this Aussie dollar pair? No. Okay, there is still buying opportunities. Only if it breaks above 0.72. Okay, my entry level would be 0.722. All right, let me just put the line here. 722. This will be my entry level. Okay, only if it breaks above 0.72. And then my stop loss, okay, would be at 0.718. In this case, okay, this will be a short-term buy, okay, because normally I would have my stop loss behind my support or resistance zone, okay. But in this case, I'm only having it behind the 0.72 level, okay, hence short-term, all right. What about my take profit? Okay, my take profit would be, my potential take profit, okay, would be at 0.728, just before the resistance of 0.73. All right. So if I'm looking for a buy of the Aussie dollar, it's going to be a short-term kind of a trade. Okay. Now, as I've mentioned, it's actually coming back down. All right. But the thing is, okay, we wouldn't have that much of a trading space, okay, if we were to sell like right now, okay, because it's actually heading towards my support of 0.716. Hence, okay, if I were to look for selling opportunities, okay, Aussie dollar will have to break below my support zone, okay, before I will look for selling opportunities. Specifically, okay, I will look for selling opportunities at 0.712, around this level. Okay, it need not be 712, like fixed or something like that. If you guys do trade with buy stop, sell stop orders, limit orders, and things like that, yeah, then you guys can set at 0.712. Otherwise, my take is for it to be for the support level to be broken, okay, heading to the 712 level before looking for selling opportunities. And then my stop loss would be at 0.718. Okay, now this will be a, I wouldn't say this is a short-term trade. Okay? This will be a slightly longer-term trade. All right, 0.718 would be my stop loss. So it will be a 60 pip stop loss. All right, and then my potential profit would be at 0.703. Why is that the case? Look, if my support of 0.716 were to be broken, okay, the next support level would be at 0.7. Okay, a neat number, all right, over here. This is probably going to be like a pretty strong support, I would say. all right? And my potential take profit for this sell trade would be at 0.703, okay, which is a 90 pips take profit level, okay? So overall, my risk reward would be something like a 1:1.5, okay? Positive, not bad. But of course, you guys might want to actually pay attention to the trade, because like what Scott has mentioned earlier, okay, Jerome Powell, the Fed chairman, okay, will be testifying tomorrow. And for Traders Club members, okay, I will give you guys an earlier insight into, what can we expect, or, whether there's going to be any impact tonight during our Monday's night call, okay, when I go through the economic calendar. All right, so that's all for Aussie dollar. Short-term buy at entry level 0.722, okay, with a stop loss at 0.718 and a take profit level at 0.728, okay. And then there's a sell potential as well at entry level 0.712 with a stop loss level of 0.718 and a take profit level of 0.703. All right. Now, moving on to the Kiwi dollar. Okay, just go over to daily to show you guys my zones. Oops. Okay. So, similar to the Australian dollar. Okay, by the way, this is the daily chart. All right. So last Friday's daily candle would be this green one, this bullish one over here. Okay, as indicated by this vertical dotted line. So similarly, similar to the Aussie dollar, the New Zealand dollar actually reacted, I would say, favorably, okay, towards the NFP data. Not that the non-farm payroll data is good, okay, because it's bad. So, the dollar temporarily weakened against the New Zealand dollar. Hence, we get a bounce off from the support of 0.674. All right. And let's head down to H4, okay, for our trade ideas. So at the moment, it seems like it's taking a U-turn kind of thing, all right? Because if you can see over here, there's this long upper shadow, and then the next candle, next H4 candle, it tested again, but pretty much to no avail. And the current H4 candle is actually showing a bearish momentum, all right? So similarly, okay, I have a short-term buy if this whole uptrend, this whole mini uptrend, okay, small uptrend, were to continue, all right? And my entry level would be at 0.682 over here. Once again, okay, realize that there is a round level over here, round figure level, 0.68, okay? And although, 2 H4 candles ago, this long upper week is a bit close, but not so close towards this 0.68 level. But my take is that traders out there, market participants, okay, were actually trying to push it towards the 0.68. But then, there's just not enough boosts out there to push it up, all right? And moreover, it was a Friday, okay? So I believe many of the traders would have closed positions and things like that. Hence, it didn't manage to come close towards the 68 level. Nonetheless, okay, I will pay attention to this level, okay? Only if we were to break above this level, and then I'll be looking for a buy, a short-term buy trade, okay, at the 0.68 level. My stop loss would be below, okay, behind this 0.68 level, okay, which is at the 0.678, which is around here. 20 pips below, 40 pips below, okay, 40 pips below the entry level. And then my potential take profit level would be, okay, as you guys probably would guess already, okay, would be at 0.692, okay, just before the price come close to my resistance level of 0.694, all right, which is a 100 pips potential profit. Okay, so this is pretty much a 1:2.5 risk reward. Okay, but once again, it's short term. Okay, with Jerome Powell testifying and things like that, you guys might want to come back to this trade every now and then. All right. Now, next one would be our sell entry. I would say this sell entry we may have to wait for a little bit longer this time around, okay? Because I would like the New Zealand dollar to actually break the 0.674 support level, okay? Before looking for a sell at 0.669, which is actually here. Okay, 0.669. Yeah, as you guys may have already guessed, okay, broken the support level of 674 is not enough, okay, because it's coming close to the 67 level, okay. And we can see that over here, let me just add another lines, and I'm going to change the color, okay, to red. All right, as you can see over here, the 6-7 level there was actually a strong reaction, a couple of strong reactions, okay, back in where is this, 15th of December last year and 20th of December, okay. It actually tested to break below the 6-7 level, but then it bounced back up again. All right, so something that I'll pay attention to. It may not be a support level, okay, in my daily time frame, but it's definitely some would call it an interim level, okay, to pay attention to. All right, so only if it breaks below this 0.67 level, then I will be looking for a sell entry at 0.669, okay, and then my stop loss level would be at 0.676, okay. It has to be above by the time it actually breaks the support, this level will become a resistance, okay. So it has to be above my resistance, which is at the 0.676 level, and then my potential take profit level would be just before the next support level at 0.656, around here, 656, okay. So sell entry would be at 0.669, okay. Stop loss 0.676, 70 pips. Take profit 0.656, 130 pips. So this is coming close to a 1:2 take profit level. 1:2 risk reward ratio, okay. And then for our short-term buy entry, okay, the entry level will be at 0.682. My stop loss would be at 0.678, which is a 40 pips stop loss level, and take profit would be at 0.692, 100 pips. Okay, so that is for the New Zealand dollar. Any questions on trade ideas, on what I've covered on NFP, on any trading related matters and things like that? Okay, if there's no questions, you guys know the drill. Any new questions and things like that, put it in the Traders Club. All right. With that, just remember that we will be having a Monday session tonight at 2000 GMT plus 8. Okay, whereby I'll be going through the whole economic calendar for this week. Okay, and yeah, I'll definitely be covering about the Jerome Powell's. Not that I know what he's going to say in advance, okay, but yeah, what to look out for and things like that from Jerome Powell, okay, and Scott and I will be sharing some other stuff as well. So with that, I will see you guys in the Traders Club tonight. I'll hand it back to you, Scott.
All right, thanks for that, Gimme. And I have shared all the trade ideas in the LCMS Traders Club Aussie and Kiwi discussion chat. And just remember to get onto the LCMS Traders Club if you haven't already, to get all the trade ideas and also the updates on when entries are appropriate, just based on the market fluctuations as well. So we do update things accordingly with how the markets are responding live as well. So make sure you hop on the 8 o'clock call to all the members. Thanks for watching, and bye for now. Have a great day, everyone.